The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Prowling and prowling with us out here. We hit the Dow Industrials right now up 35. Nasdaq up 9. S&Ps are up 4.5. You got gold up $2 at $1,196. Silver's up 4 cents at $15.98. Oil is up $1.79 at $56.15. Bonds, they're flat. The 10-year is up 2 ticks, 126.18. Now, both of them rejected lower price today with lighter volume. The 30 is flat at 143.24. And King Dollar is the number out here today, folks, and this is why. King Dollar right now is up 83 ticks, 89.56. It's been testing the highs of last week with dramatically lighter volume. Euro is down 14, and the yen is trading out there at 119.38. Our phone number is 877-927-6648. Let's call, folks. Want to know what's going on in your world. Now, we want to go over to the world of King Dollar. Why? This is what you have. Bottom line, this market, number one, can't stand the weak dollar. I mean, in a dramatic way, too. It's pretty intense. So the high of last week is 88.78 inside the dollar index. We get 10,000 contracts out here today, which is really light in an extraordinary way. And what I expect you're going to see is that it's just going to back off slightly. Nothing heavy. It's going to be like a subtle test backing off dramatically lighter volume. Inside the gold market, now the correlation kind of is direct. And what you have inside the gold market is this. The gold market right now is flat. And, you know, it needs a few signs of strength. It's had a few signs of strength coming off the bottom that was established out there on November 7th. We're at 1197.60. What we have done today, which is pretty neat, is that we had a flat market, but you've already done 42,000 contracts, which is a decent amount of contracts. And what you do have a shot at out here, which is going to be pretty cool, is that you have a shot at trying to run into the 1207 mark, which would be a nice expansion, particularly for a Friday. What would happen first is that we need a sign of strength to get us up to the 1205 level first. But that's the way this little baby is set up at this particular point. Now, if you haven't test drove the Nadex platform yet, folks, come over to our website at TFNN. And what you can do is this. You'll see the banner on the top, on the side. You can bring up the exchange, open up the account. It's free. They'll put $25,000 of paper money into your account. And you can see exactly how this exchange trades. What happens is this, is that, you've heard it many times, is that your trade is your stop. Whoops, where did I just put it? Oh, there it is. Sorry. There it is. I got it. Okay. So what you have, especially in a volatile market like we have right now, folks, is just dynamite, because the fact of the matter is they're time contracts with prices. And in this particular case, if we were going over, and let's say that right now we were looking at the commodities, and we'll go into the gold contract. Let's see what we have happening inside the gold contract right now. So, and of course you got oil. Oil's nice and volatile too. So inside this gold contract, let's bring this back up here for a second. So we get GCG5. We're dealing with a 2015 all over the place. So we're at 1196, and time-wise, you're going to put both of them together. We're at 1010. So what you have out here is you have a daily, and you have a 10 to 12. A spread on a 10 to 10, 1196 right now, over 1197. Over 1197 would cost you what? So we're looking at it as a spread contract right now, and if we were buying one, so that's about a 50-50 deal. So on a 50-50 deal, what you have is this: is that you got an 1197, you'd be right now, I'd be risking $49 to make $50. If in fact that can go up to what's the top side? It's just basically over that period. 1 second, hold on. Let me, December 19th, over 1197.40. I'd be bidding that it's going to go over 1197.40. That's what I'd be bidding. If I got into that is the, well, that's a binary. Okay, hold on 1 second. No, that's a binary. Interesting. So if you went to the binaries, now the way you do a binary is this. Okay, so if we talk about a binary, I'll pull up the spreads because that one doesn't make any sense. Because if you're doing a binary, what ends up happening is you'd be basically taking a shot and saying, okay, I think within by noon it could get into the even 1200 mark. Now this is where this does get interesting because then you're talking a risk of $32 to make 38. Okay. At this point, that is not where it's at, though. None of those are where it's at. Let me go into. I'm going to go into the spreads just for a second. So if we take a look at the commodity spreads, we do those in gold, and I'll go into the noontime also. We're at 1197. And what happens here is this: you don't have something that's pretty close. That's what's going on. And what I like to do when you're doing these contracts is that you like to try to get as close to the bottom of the box as you can. And the reason being is this, is that what ends up happening is that if you get to the bottom of the box and you're putting the trade on and the price point is close, your risk is dramatically less and your reward is more. And it doesn't mean what ends up happening is that you can get to the top of that box, because the top of the box in many cases is just way too far up inside the time frame that we're talking about. But now, and in that context, let's go over to the S&Ps, because inside the S&Ps they have a variety of different contracts that can be traded out here. So thus far what we have is this. We had option expiration is out here today. It's quad witching, okay, and with that specifically is you have the options on the futures on the S&Ps. They expired at the open, and now what we have is this, okay. You have, that's good, that's a down bar, okay. So at 0930, that would be the shot, okay. So realistically, you know, particularly after a day like yesterday, having a flat day would be basically almost a normal occurrence. The S&P is not ready to basically sell just yet, because what you have is at the very top of its range, meaning it's at 2065. They'll try to get this up into the 2069 area. 2069 wouldn't be a bad situation. I did hear a statistic out here this morning that was pretty intriguing, and what it was is this. Is that there's no doubt the last 2 days on the S&P, you know, you went up 4%. That is a monster number. And the number, this is just on CNBC a few minutes ago when I was riding on the way in. And what the number was is this, is that since 1990 there's been 11 moves inside the S&P that have gone up 4%. And 3 of them, well, out of the 11 moves, 8 times 3 months later you've been higher. However, those 3 that you haven't, well, I didn't get the third one. The 3 that you haven't, now bottom line is that in 2000, when the market gave it up, and in 2007. If I remember in 2007, and we were on the right side of that, we were short, then we flipped a position because the trend and the tick index went so bonkers, and that's when the market opened up 900 points the following day and gave it up, which was just a total mind blower. If we go over to the, let's go over to the oil market, CLG5. So inside oil right now, we got 127,000 contracts that got into the lows of yesterday. Yeah, she might be just building some strength. She very well could be building some strength right now. We'll see if she can handle it. So yesterday we got down to a price point of 54.28. Right now we got 54.42 today. Basically, that's not a rejection of lower price yet. It would have been better if, in fact, the contract itself got into that low. It didn't get into the low, which is saying that, okay, it can get lower. You know, it would have been much better if it actually had got into the low. If we go take a look at some of the high volume stocks in this market. And today, what should happen, folks, we should get high volume. It's going to be really shocking if we don't, with quad witching happening. Right now, you get Microsoft up 35 cents, Facebook's up $1.30. You get Pfizer down. Pfizer's down 13. Inside some of the Dow stocks, because the Dow no doubt had juice out there yesterday. Big Blue is going to be the one to fire away at. We'll see where that shakes out. Big Blue right now is up 223. You get ExxonMobil flat. Disney, DuPont rather, is up a buck. Walmart is up 45 cents. If we go over to Big Blue again, we take a look at Big Blue. Big Blue is coming into the you're at 159. I'd let it go to 161 or something. You get 3 million shares. You're coming into 20 million shares, and Big Blue yesterday did 7.3. Big Blue is a dead dog in an extraordinary way. Inside the XAU, the HUI, what we did have in the gold and silver market yesterday is you had buying coming into the close, which was a nice little deal. If we go to, we won't get the volume on the XAU, the HUI just yet. If we go over to Rheingold Resources first, Rheingold is trading at 68.91, and that's going to have the volume. Right now, it's coming into a swing point of 1 million shares. We've already done 165,000. That's a nice setup right there. If we go to Anico Eagle, we'll see if that can get the juice going. That's coming into a swing point of 3.6 million. That's going to need more volume. Right now, it's 430,000. Let's go to Travis in St. Louis. Hey, Travis, what's going on?
Hey, not too much. Good morning, Tom.
How you doing, man?
Hey, I'm doing great. Merry Christmas.
Merry Christmas to you, too. Let's make it a great one. Great New Year. 2015, can you believe it?
Can't believe it, man.
I know, man. That's pretty intense.
Hey, let's take a look at a royalty company here, Sandstorm. I know it's a relatively new company. I think it's Olin Watson that's the CEO, but I'm a fan of his. Not a big fan of the stock, but I just thought I would take a look at it. I mean, it does look interesting and intriguing here off these bottoms. I don't know whether it's got something or...
let's take a look. So you get Sandstorm. They acquire gold purchase agreements with companies that have advanced stage development projects or operating mines. The company makes upfront cash payments to its partners and receives the right to purchase a percentage of the gold produced for the life of the mine at a fixed price per ounce. The low is 245, the high 769. Okay, so let me pull this back a bit. Okay, so it's just like every other stock in this gold market got smoked. Comes back to 2010. First leg down, 252. Hey, just stay right there, okay? Just have a quick break. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. You know, by the way, in the gold market, folks, folks are thinking that Putin might be selling gold. Guess what? They've been buying gold. He went from 37.6 million to 38.2 million ounces. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with Travis from St. Louis. We're talking about Sand, which is a gold royalty company. What is interesting, and this is always one of these deals, do you believe it or not, but, bottom line is that in Russia, there's been speculation, well, actually, there's been speculation that to keep the currency going, bottom line is that they may have been selling gold, bottom line, they're saying it's just the opposite. They're saying that Russia, by the way, is the 5th largest holder in gold in the world. We're the largest. But what has been reported, and this is on their website, is that specifically they've been buying gold. And before this crisis actually did come, what has happened, okay, and I believe that. I don't know if I believe this one, they've been buying it. It would make sense that they would. Let's put it that way. But before, like the last 60 days, they've definitely been buying gold. They've been buying gold for 8 straight months in a row. So they reported that at this point they've bought actually 600,000 ounces this month. So we'll see where that shakes out. Now, they also bought gold at the highs, but bottom line is that at this point they're claiming that they own 38.2 million ounces of gold. And, of course, inside the gold market, folks, what you have is everyone claims something. And even in our own market, no one's ever really seen the gold. Anyway. We're going over Sandstorm Gold. Sandstorm is a royalty gold company. The low is 245. The high is 769. And if we take a look at this, you know, you've had a couple nice signs of strength here, Travis, you know. So, I mean, I can see what you're looking at. It's set up just like the other companies are, meaning in the business in general, which is good, you know, because what you have is that you're at 330 and it looks like it wants to go test 456, you know. So it's not a bad place to be right now.
If you wanted to pick up some shares, I mean, I know we're talking trading probably more so right now on the 450 because it's really hard to tell whether the gold market has actually hit lows yet. But is this company, you think, worth a viable investment over the next, say, decade?
I don't think that. I think this company is overvalued for what it has. Okay, so this is where, now this is a fundamental take on this, but it has a market cap right now at that price of $388 million. Okay, and it only takes in $17 million. You know,
right?
That doesn't make any sense to me.
Well, I mean, but I guess it comes down to if you think gold prices are going to go back to the highs again, the revenues are going to increase substantially. So,
well, they are. And what I would do is this. If you're looking for that type of investment, right, what you can do is this. Go on the SEC site and pull the contracts that they have with the gold companies, okay? And this is really cool, folks. I did this with Franco-Nevada and I did this with Royal Gold. And it's really cool understanding what the contracts actually have. And I'll give you an idea of the other contracts of how they work, okay? Is that, and when I had done this, by the way, I did this going back 2004, 2005, and what Royal Gold and Franco-Nevada got out of this, which they made now, if they're still doing deals, okay, is that when gold was at a price point, let's say at 350, 375, because it stayed there for a long period of time, okay? The royalty companies then, the only ones that were out there were Royal Gold and Franco-Nevada. And Franco-Nevada was the strongest one. Franco-Nevada was the first one that really figured that business out. And the way they structured the deals is that they structured the deals that they'd get like 7% of the gross. It was always the gross, okay? They get 7% of gold at $300. They would get, 7% at like 350. Then what would end up happening, folks, is this, and this is where this kicker came in, which is really a trip. If gold went to like 425 in both Royal Gold's and Franco-Nevada's places, right, the royalty didn't go down. The royalty went up. Okay? So some of these contracts that they had at the very beginning were like amazing, okay? So that they were actually kicking in more money, and of course we know what happened to gold. Gold, went from 282 up to 1900. Now, when gold got to about 1100, what happened is this, is that there was so much money that was getting pushed into the gold mining companies that the gold royalty deals were not as good anymore. Okay, so then what ended up happening is this. The contracts that got done starting about 2000 and, it was actually 2005 and 6. Those contracts there aren't that cool, okay, because what ends up happening, they were about 11, and then we had the crash again. So then the contracts got better after that. But the key is, Travis, is that if you read some of those contracts, you can really wrap your head around it on a fundamental basis if, in fact, you want a 10-year deal on it. Do you know what I mean?
Sure.
Cooking, brother.
Thank you.
Have a great one, man. Have a safe one. You stay right there, folks. We'll come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member, FDIC, and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So you got the Dow Industrials right now up 22, Nasdaq up 6, S&P's up 2.5, and this is going to be pretty cool, folks. And they're going to be fighting this like dogs and cats. But what the government is going to try to do right now is that they're going to try to put a system in place that so picture this. We know that the school loan programs, might take us into their total rip-offs, and that's why education is so expensive. You know, you get the private colleges getting huge amounts of grant money. The poor kids are basically in hock up to their eyeballs. And so what has happened is that you can go to college, and then how the heck do you pay for it, that many years later? So evidently, every year, our government, I think it's $150 billion a year, that they're basically on the hook for. So what they're going to do is this. They want to tie in, they're going to make a rating system, have a rating system. And it's flat out, schools can't stand rating systems, number one. But check out what this rating system is going to be. This is pretty cool. The rating system, flat out, will be, and it's going to be a market-based system. What happens, and this, this is how it works. let's say you go to college. They're going to get tracked. The people that graduate from college are going to get tracked, and 10 years later, they want to know how much they're making 10 years later, which is a good system to have. That information will be public so that parents and folks that are going to school can turn around and say, okay, I'm paying this much money for school. Based on the 15,000 colleges that are across the United States, how much money? 1,600 colleges. Yeah, how much money may I make 10 years after I get out, and is that investment worth it? It's going to be interesting. There'll be a huge amount of pushback from the schools on that. There's no doubt about it. But this one's going to be intriguing because it doesn't have to do with the aspect about rating teachers or rating schools or anything. What it has to do, flat out, is that what the government's saying is that, okay, we give $150 billion in, loans to 1,600 schools. Then they're saying, okay, if you go to the school 10 years later, how much money are the people making out of that school? End of story. That's it. Okay? So we'll see how this pushback comes in. I think it's a great idea because I think most folks basically are taken to the cleaners, and that's been going on for a long time. I mean, if you want to go to college, but the bottom line is that you should be going to college to get a degree on something that you absolutely can use. That's what it really comes down to. Okay, so market-wise out here, if we take a look at it, it'll be interesting if this gold does pop its head out. Okay, so you're at $11.99 right now, and this is going to have everything to do with the dollar index. The thing that's really cool right now inside the gold market, folks, is that the market won't back off, and the dollar index is at its highs. So the way this is set up right now, yeah, this is set up right. So watch what's happening right now. We get 2 minutes left in a 10-minute bar. It's not that there's huge volume, but it's subtle, but there's enough. There's 1,400 contracts thus far. The spike that we had this morning up to that 1,200 area was light volume. So that's saying, number one, that it's going to get up to that level. The real key is it going to be able to launch that level? Now, if we go over to the dollar index and we take a look at the dollar index, let's see what we have with the dollar right now, DXH5. That index right now is at 89.60. And there's not much happening there. Yeah, there's not much happening there. It might just lay out for the day. There's really not much happening there. We go over to the E-minis. We take a look at the E-minis because inside the Nadex platform, what you do have, folks, is that you have the 20-minute indices. Oh, and she's going to do it right now. Let me see how many minutes are left in this 20-minute one then. Okay, 1 second. What we do have... There she is. Okay, so right now we're 2062. Oh, that's good. We just started one. Okay, so you got... No, it's not yet. We'll wait for the next one to come out. The next one will be coming out in a minute. So what you have is this. Yeah, next one's coming out in a minute. So this is what you'd be looking for in the 20-minute indices. You'd be looking for the 2056 level to get hit. That got spiked at 940, and it was a spike down there. Yeah, that's a real number. 2056. That little baby looks like it wants to get hit. That's how this is shaking out right now. So what you do is you let this one start first. And what I've found with the 20-minute ones, if you can do this, and as one of our tigers is saying in the den, go for the singles and doubles. That's where it's at because the volatility is high. And what happens inside the 20-minute ones, if you want to line up the swing point, but would you also want to line up, if you can, well, it's not that it's hard to line up, but if you can wait to about 11 minutes left inside the 20, because your premiums come down. And when you have both of them lined up, then yes, you're paying less because you have less time. But if that's at the swing point, it's either make or break at that particular point. It's going to go after the swing. The real key is that as it goes after the swing, it's going to make it or not make it. That's what it comes down to. If we go over to SPY and just look at the SPY for a second, what you're going to see in the SPY is that you get a flat market out here. The highs in the SPY are 208.47. Let me show you something, though, that is I haven't seen for a while. It always, when you get a bad tick in the marketplace, folks, they're problematic, and sometimes it's like, man, okay, what's that all about? And we got a bad tick yesterday at 212.97, and that's like, man, are they going to run that thing up there? I know that sounds bizarre, but I've seen those ticks before, and it's like, man, okay, is that someone that just signaling that, okay, let's run it up to those levels? We'll see. My take is that won't happen. I'm bringing it up because of the aspect. It's important to understand what can get done. Inside the NDX 100, bottom line is that you're up 42 cents. We're at 104.28, and the high is a lot higher than that. It's 106.24. The small caps. Now, the small caps haven't hit the highs yet. Small caps, we are over the highs that were generated out here the last 2 months. That was 118.78. We got to 118.90. It's at 118.53. The actual high is that 120.97. And that number was generated in July. A couple of the high-flying stocks, they still can't get out of the way. Amazon can't get out of its way. Google can't get out of its way. The strength inside the NDX 100 out here today, Wynn Resorts, that's a dead cat bounce. That's up $5. Vertex Pharmaceutical, that's strong. That's up $4. Symantec is up 56 cents, and Fastenal is up 94. Taken away from it is Mattel. That's unusual coming into Christmas, but they're having problems evidently. Paychex is down $1.16. You get Xilinx off 1, and Garmin is off 125. We go over and take a look at Intel. Yeah, Intel's not holding price either. We go back to those E-minis right now. We just take a look at those E-minis inside this Nadex platform. Oh, ESH5. No, I'm probably ESH5. Okay, so we are at 2065. Yeah, I just let you let it first get into this the 6-7 area. The 6-7 area would be the number. You'd let it get up into that area, then you'd be you'd be selling the closest one to that area, and then gunning for the 5-6 number. That's how that baby would be shaken out. Silver, we go over to the silver market, which silver hasn't been able to basically get going. Bottom line is that this October, the benchmark in all these metals, folks, is October 30th. The October 30th number, that's where silver went from 17.25 down to 16, and then lower into 15. That's the number that silver has to get through. That's the number that if we go back to gold, what you did see, gold blasted through that number. And gold thus far, yeah, gold is in much better shape than silver. Silver is highly volatile, though. Silver can go up or down 5%. It's much more volatile than gold. But right now, setup-wise, technically setup-wise, gold is in a better position. And what that is that the position that it's in is that it's almost at the top of the bar from the 31st of October. The 30th of October wasn't a killer in the gold market. In the silver market it was, but it's made it through it. And when gold actually did make it through it on December 9th, it made it through it with wide price spread, accelerated volume, and what that sets up is it wants to be back up there. We did 243,000 contracts, and then we backed down with 170. When you do that, that is building cause for higher price, driving people crazy, no doubt about it. But that's how that baby is set up. The bond market, you can have some fun with the bond market, folks. Bond market on a continual basis wants higher price. What you had out here today is that it rejected the 143.03 level. This is the 30-year. We're at 143.28 already. This is building cause to blow away, just rip apart this 146.16 spike high inside the 30-year. The 10-year right now is at 2.1, and the 10-year is still basically saying that it wants to get up to that October 15th swing point. And the thing that is absolutely bizarre, there's no two ways about it, is this, is that bonds on a continual basis want higher price. As bonds want higher price, guess what? That's a market lower price. So we'll see where this baby's going to shake out in the next, few. Well, it's going to be more than a few weeks right now, because what we do have, the last day of weekly trading is this week. You'll have action Monday or Tuesday, but it'll be very slow action. People will be, I suspect, Tuesday afternoon. You'll be leaving Tuesday afternoon, and that's about it. And the real key is going to be, will the action come back? It'll probably be on January 5th, because what you have is that Christmas is on that Thursday, next Thursday. New Year's is the following Thursday, so forget Friday. That following Monday is going to be where the action's going to be coming in. 877-927-6648. We go overseas. We take a look at overseas. We had the FTSE down, up 1% today. The DAX was off 0.3%. The CAT was is down 0.3%. Last night in, let me see if this, in Asia you had the Nikkei up 2.5%, but this is something that still is still on a retracement, basically. The Nikkei come off its high of 13,000. Right now, you're at 12,799. Market-wise, we'll see whether it can basically hold these levels. After a day like yesterday, you can expect a flat market is normal, and that's when all's said and done out here, I suspect that's exactly what you're going to get out here, is a flat market coming into the close. What will get interesting is that can the IWM hold these levels? Because what you will have is this. Let me put this on a weekly for a second. What you want to be doing is setting some of these weeklies up. Actually, you know what? The IWM right now, don't go short the small caps right now, because this is what you have. Already, the IWM is pushing into a swing point for the week at 264 million. That's a lot. That means that the IWM is going to try to finally get into its high from July. If we go to the, might as well do all of them right now. If we take a look at the S&P, we put this on a weekly and see where this shakes out. That's a bad spike. But the S&P also is pushing with volume on a weekly, and this is going to be wild. Go to the NDX 100. And the NDX 100. The NDX 100 is a toss-up. That's interesting. So watch what it is. You're at, the high was 104.41. And the high is 2 points higher. It's like, okay, are you pushing into the lowest swing point with volume of the high? And you don't know. But what does happen is that the SPYs and the IWM are basically pushing in, and they get some volume behind that move. We go back over to the E-mini right now. What you have is that you're at 2060, and she's going to go after this little lower swing out here. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials right now up 9. Nasdaq up 2. S&P's up 1. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. So you get the Dow Industrials right now up 6, Nasdaq's up 6, S&Ps are up $1.50. And don't forget, folks, if you happen to be in the metal market or you want to be in the gold or silver market the next year, you have the next 2 days to take advantage of the gold report special that we have going on now. This past Tuesday was the 660th edition of the gold report. You can do 60 editions for $600. You also get a copy of my best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, which is an $88 value. So you can check it out on the front page of TFNN. Market-wise out here, thus far, volume, what we're going to have is this. Is that volume in the NYSE right now is at 601 because of option expiration, of course, and on the NASDAQ at 742. Now, the NASDAQ doesn't have the juice into it, which is really unusual, even volume-wise. The way that the NYSE is trading and the S&Ps are trading, that's going to be crucial as to where we close out today. And you can expect, I think, a bit more volatility, but what you're going to need for that volatility to come in is for this dollar index to move. The correlation is quite direct, meaning strong dollar, strong market. Weak dollar, weak market, which is pretty wild because that correlation for years had been just the opposite. And, thus far there's not a lot of trading in the dollar period. But what does and can happen very quickly is that the currency moves, well, let's see. On a Friday, you really get about 3 more hours. So we got our man, Mr. Basil Chapman's going to be coming up next with you. Then Paige and Nico will keep you happy and healthy. Then you get Darrell Martin and Dave White. I suspect for the volatility to be in the currencies, you have about 2 hours. That's about it. Where that baby shakes out, if that shakes out right where it is, well, that's where the market's going to end, kind of where it is. Inside the, if we look at the XAU and the HUI, what we have at the XAU is this. The XAU right now is at 70.11, and you're going to back over 72 is a good number. 72 is the good number. That's been building cause. It already came into its lower price point, had lighter volume, rejected it. The gold bugs index, the HUI, we're at 168, and you want to see that over 174. Now that's done the same deal, meaning that you've tested the lows of it. The HUI, I like the volume of the HUI I had yesterday, actually. I came in with 25 million, which isn't bad. We have swing points up there with 23 million and 30 million. So we're going to need to get up and over those swing points. Is that fast and furious volume coming in? When we take a look at the currency outlook, if we go over to the euro for a second, because the correlation is just the opposite inside the euro from the dollar. The euro is at 122.66 right now, and that's gonna it got to 122.53. The low is 122.47. This is directly against the U.S. dollar now, and what you'd like to we'll see if the euro breaks down at this point, then watch out, man. I mean, because I can tell you on a longer term basis, it looks, if I bring this euro up, what you have, number one, is it wants to go to 118. 118 is screaming. If you break these levels here, then you have game down to par, like in a heartbeat too, folks, in a heartbeat. There's nothing. See, when we went up from 01 to 04, there was nothing. It was a straight move up. This is Tom O'Brien. This is TFNN. You stay right there, folks. Our man, Mr. Basil Chapman's coming up next with you. Dow Industrial's up 19, Nasdaq up 9, S&P's up 3. Basil's going to be right up, folks. Have a great one. Have a safe one. And of course, I look forward to speaking to you this afternoon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.